Hello and welcome to Bottom Line, our weekly round-off show. Atanu Chakravarti has suddenly resigned as HDFC chairperson. He said certain practices were not in congruence with his personal values and ethics. What does it mean? He refused to provide details despite the board's request. HDFC shares plunged nearly 9%. Over 1 lakh crore rupees market value was lost in one day. This abrupt exit raises serious questions on governance. It damages RBI's credibility as a regulator. It shakes public trust in banking safety. The fallout hits the economy hard. Investor confidence in private banks has weakened. This may slow credit growth and dampen market sentiment. This raises a few critical questions like what undisclosed practices at HDFC banks violate his ethics? Why did he resign abruptly without sharing details with the regulators? Does this expose major governance failures inside the bank itself? How did regulators fail to detect issues over 2 years? How safe and stable is India's private banking system now? My colleague Shankkar Aiyar and I look for answers to such vital questions in this episode of The Bottom Line. Shankkar, let's go into latest banking news. Have you ever heard bureaucrat, IS turned banker, suddenly resigning and creating a crisis for the bank? What could be the motive?
It's the most curious combination of private sector foolishness and public sector foolishness. In the sense, this person was appointed chairman of a bank which is the 7th largest bank in the world. When you resign from such an institution, for whatever reason, you should either say why you're resigning or keep quiet and cite health reasons or whatever and get out. This person has said that it's not matching with his values. What values? Then you say what the value is.
Values and ethics, personal values and ethics, what we are talking about. He's a former IAS officer coming from Bangalore. He was appointed by the same government and appointing, as you said, 7th largest bank in the world and second perhaps in India, isn't it?
Yes, after State Bank of India is the largest bank.
Which is a public sector bank. It is the largest bank. So he's resigned. He has not explained why did he resign and brought the bank share down by almost 5% in one day. They lost about 1 lakh crore rupees. Was it who has to be made accountable for that?
No, definitely this should be looked into. Whether I would go as far as this much that the people on the board would have known this is happening. They should examine who all traded on that day or what the issue was. Why did the chairman say something and then say, no, it is, I have no friction, I have no animosity. But then you say that it is not in congruence with your value and ethics. What does that exactly mean? Either there is something wrong with the bank or there is nothing wrong in the bank. You can't have both ways, no?
Shankkar, but what point he is making it, the question is, he's the non-executive chairman. And the CEO and MD of the bank has all the powers. Who's another problem there? The question which I've read in the newspaper and social media seems to be there is a conflict between the non-executive chairman and the CEO of the bank and CMD on certain issues. Because as you remember, a couple of years ago or a decade ago, these posts were bifurcated. Now it looks like in hindsight, because I always look in a different way, that earlier there was CMD was the one person. Now you've got two people heading the bank. One is the chairman, and obviously they wanted to oblige certain bureaucrats or some bankers, because most of the chairmen are retired IAS officers.
Yes.
So the Babus created a post for themselves, and they're now fighting with the professionals.
The structure of the company's law, the position of non-executive chairman is very clear that you are non-executive. So if the chairman starts to, by habit or for reason, whatever, feels that he should intervene, and that leads to friction with the CEO is empowered, the board is empowered. Now here the case has been, apparently the CEO said that this non-executive intervention in the bank doesn't work for me, I will resign. And based on that, the board said, no, you can't resign. And eventually the chairman had to resign. This is what I hear from the people inside the bank. Now, whatever is the truth, the chairman who resigned has to be very clear and responsible, Prabhu. If people have lost money 5, 6, 7%, even today HDFC is down at 780, even after 2 days. So this somebody has to be accountable for this.
But that question, if you are saying for the second day, consecutive second day, HDFC Bank shares are falling, it means people have more trust in the retired IAS officer than the bankers. So all
Not
the explanation
necessarily.
because they
No,
believe that there is something rotten in the bank.
I won't agree because who they have appointed as the chairman was earlier the chairman. So KK Mistry is the original chairman of HDFC and stuff like that. But the question is that people have a doubt. Now, this resignation letter has seeded a doubt into the minds of investors and shareholders that there is something they are trying to hide. Now, nothing short of inquiry by SEBI or whoever will clean this mess. I
So
think
there should be inquiry, na? Whether he said or not, what
yes.
are the actual reasons. The public faith will come back only because depositors' money lying there. If you are asking depositor, give me your KIC, give me your details, why can't the depositor whose money you are playing with? Well, they are also entitled to know the reasons why the bank chairman resigned.
No, just like KYC, I think board members should declare KYI, know your interest. You know, what is your interest? What are
Or
you
know your
saying?
chairman also, na?
Yeah, yes,
KYC means
definitely.
know your chairman as well.
He should be the first person to be called to give a deposition.
Nee, but question arises, which I've read, there was a basic problem in certain cases like Leelavati Hospital, which is still sub judice. But they say these kind of names, when we prop up, people start doubting the integrity of the banking system because
Fair,
so much.
fair enough, Prabhu. There are cases going on in Dubai. Today they have sacked 3 people. All those things are happening. But if you were the chairman of an institution and you left, either you would give the 5 reasons why you're leaving, or you will say that okay, I'm tired, I'm done, मेरा 6 साल हो गया, मैं निकल रहा हूं, अब तुम्हारे हवाले है वतन साथियों. There is no other way to sort of look at this. You cannot say that there is nothing wrong, but your letter says something is wrong. This is like saying operation successful, patient is dead.
With Atanu's resignation, Shankkar against it bolsters the people belief that there is something wrong with the banking system the way it is run. Because you may be doing whatever people talk about favoritism, phone call loans were given. Now there is a cleaner balance sheet they've got thanks to various other insolvency and whatever is happening in that place. But this resignation also again raised a doubt about the safety of the depositors' money. Yeah?
Of course, very much so. I mean, particularly, Prabhu, in the last 1 month, bank shares, totally the Nifty Bank index has lost 55 lakh crores in market capitalization. Already something is going wrong. And then on top of that, this resignation drama. So there is reason for clarity. There is reason for explanation. I think that the chief executive officer, the CEO and others have done whatever they've done. But this requires a very clean discourse, a clean revelation. Whatever is the issue, put it on the table.
You see, banks do matter in the system. Now, the question is, this is HDFC Bank as one of the biggest bank in India, the biggest private bank in India. So, banks, people are still banking. We are not fully banked economy yet. Rural economy is still not of the banking system. If these kind of questions are being raised, don't you think the future of banking itself is in danger?
No, that is the expansion of financial inclusion. That is a separate issue. We have roughly about 85-90% now. All the scheme. Where are the risks now? The entire government welfare machinery is through the banking system because of the direct benefit tax. There are something to the effect of 255 lakh crores of public money is in the banks, out of which 5 lakh per account is covered by deposit insurance, whatever it's the case.
Yeah, they're saying there's no doubt about the liquidity, very strong liquidity.
So the speed at which these things happened also raises questions. that this man resigns. They go to RBI. RBI immediately says that, okay, appoint this one, and says that nothing is wrong. The RBI, at least as a regulator, should at least, I mean, Caesar's wife should be seen as above reproach. No? The RBI should inquire into it. SEBI should inquire into it, whether everything is closed. If after 5 months that turns out to be like a Yes Bank or some other bank, then who is responsible?
So it means RBI regulatory system is also not as vigilant as it should be. They must be knowing what is happening in the HDFC Bank, because their teams go and visit there. They do the inspection. They hear the gossip also. And since one IAS officer heading RBI, another IAS officer heading this bank, there must be fraternity connectivity also, no?
Every regulator in the financial sector is an IAS officer.
Yes.
And this, in a way, you can say they know the laws, they know that they've been inside, so they will check. But the other thing is that they are used to operating in a system where there are lakhs of employees, all the resources are there. When they come to the regulator's office, the regulator by definition has less capacity. You remember the Harshad Mehta scam? What was the scam about? Because nobody was checking the SLR books. The bankers' receipts are being issued like Chana Gurmura paper. So the same may not be prevalent now, but it is still, we have so much banking, so many banks, expansion of inclusion, all of that. In that, whether the bank regulator should be so hasty and sanguine in saying, "Nahi, sab theek hai, sab changa si, abhi aap chalo." There must be some.
As you said, Shankkar, all the regulatory bodies like SEBI, RBI, there are other being headed by IAS officers who have been in the economic ministries. They have been part of the system. They have been part of the problem as well at that time. Whichever system is failing, they created the problem. Now they have come chairman to solve the same problem, but they never end up solving it. Don't you think the whole structural of the financial management of this country needs some kind of a review, where the professional must lead the financial institution rather than journalists who are IAS officer who are in the economic ministry, they take over the financial system as well.
No, but our government has this whole, all the governments, not just this government, even the previous one, ILFS ho gaya, Yes Bank ho gaya, koi aur bank ho gaya. They have this principle that any problem, send an IAS officer there. So they will have control.
That's what I'm saying. Why should this bureaucracy taking over the professional sector as well? Regulatory mechanism they are taking over. Earlier they were taking over the administrative mechanism. Everything had to go to them. Now they become the regulatory mechanism also. In the Babu style, they start thinking. So professional banks need a different kind of treatment, not the file pushing kind of a system. And you suddenly say, my conscious, आज मेरे को याद आ गया कि गलत काम हो रहा है, 3 साल से काम कर रहे हैं, आपको पता नहीं था. The question I'm trying to because banks are very important for India. That's why they cannot be left in the hands of people who in 35 years their service in IAS may not have contributed much. But they suddenly become economic experts. All those who are economic affairs secretary or a banking secretary or expenditure secretary, they become the experts in banking system.
By the simple fact that they have drafted bad laws or okay laws.
They have drafted the law. All the regulatory laws have been drafted by them, approved by them.
Now this resignation letter itself, as you rightly said, over the last 2-3 years, I have been witnessing. Then what were you doing in the last 2-3 years? Why didn't you go earlier? Why didn't you raise this subject? You have access to the regulator. You can go to the RBI governor and pull it up. Or you can raise it in the board. Nothing of that sort happens. Suddenly you write a badly drafted English letter and then you say, nothing is wrong. I think what you say makes sense, that there should be some system in which people who have served in the finance ministry or in the particular domain ministry should not be allowed to become or take positions in the institutions that they had regulated or supervised.
And don't you think, Shankkar, why can't we go back to the original system where there is one authority? There is no parallel authority. Executive chairman, non-executive chairman, and the CEO.
Absolutely.
There will be always a conflict. Chairman always thinks that he is the chairman. Why should he be there?
In fact,
when ego starts working sometime, why can't you go back? Okay, one person accountable and buck stops at the desk of a one person. chairman is there, if he gets a letter, something he finds is funny, then it is his duty to stop it. Huh?
Precisely this point was raised by Rahul Bajaj, the late Rahul Bajaj, when this system was brought in. He protested about it and he said there is no logic. If I am the owner, whether I am chairman or my son is managing, whoever is, I appoint a professional, I should have the authority and the accountability. The moment you produce this artificiality of chairman separate, managing director separate, then you create double system, two parallel centers. And particularly in the banks where the owner is not allowed to be chairman.
Shankkar, to conclude the part, they said jobs for the boys which were created by the Babudam has to be reviewed now. The bank should be left to the bankers.
The retirement club should be disbanded.
Yeah, they should be disbanded. Okay, let us go back to the next topic, which is what about, suddenly you see, as you pointed out, that most of the stocks, banking stocks, have been sold by FIIs. Is that correct?
Yes. So 40, the good banks are holding between 40 and 50% are being held by FIIs. Now, that FII holding has come down over the last 1 year by about 9-10% in most of the. For instance, HDFC Bank, about 55% holding was with FIIs.
Yeah,
now it's down to 47.
I wrote an article, Shankkar. This was the first three, four things happened. One, the Infosys, which was started by Indian entrepreneurs, became the foreign-owned company. They manipulated the law in such a way that they sold their own equity and sold it to the foreigners. Then there was the ICICI. There is a club of people in Bombay and Bangalore who conspired to sell the Indian silver to the foreigners. So first was the Infosys, which was sold out. Second was the ICICI, became foreign-owned bank. Third was the HDFC, promoted by Great Parekh.
So I have a different view on this. I think this is an affliction we have, and there are two other countries which have the similar affliction, which is that you don't have a deep enough capital market to create value for the enterprise that you have founded. You allow deeper markets like the US. You remember that in the earlier days, there used to be a very race to issue GDRs. And then UK made a similar paper, which is to find a way to bring capital into the country. All the governments were party to this because this was one way of getting foreign exchange inside the country. It was also another way for corporates to bring their own money back. The GDRs issues were also part of the Harshad Mehta scam stories. But here what has happened is that over a period of time, first they used to keep a limit of 19% only FII, then they made 24%, then they said 49%. Now in telecom, everywhere it's open. So the moment the FDI limit is open, this is open.
FDI is allowed now. Only in bank is 49%. No, banking is also 74%. 100%. 100%. That's why you're opening, as you say, deep market, because the Indian stock market, I may be wrong, it's a manipulated market. It doesn't reflect the right value of any institution here. They are floated, and bank index, I don't know how much percentage of the total index is within 10%, 12%, I don't know how much is that of the total.
No, that's a moving target, because in the Nifty 50, how many banks are there depending on that, their market cap and all. But banks have a big part. They have a big part.
Big part in the 100 rupees stock market valuation. Banks account for maybe 10 rupees, 12 rupees.
30-35% hoga.
35% is the big thing.
30-30% to hoga. Because it's not just banks, Prabhu. There is banks, there are non-bank finance companies, there are companies which are financing other activities, because this whole economy moves on the wheels of finance, no? So for finance, we have 14 banks.
So that's when this 35%, which is hold the market there, something happens there, it obviously shakes the confidence in the stock market itself, economy itself.
So to correct myself also and to correct the perception, 35% basically people are not buying other Changu Mungu shares, they are buying finance company shares because finance will go up. So because of that, its value goes up. For instance, in the US, 10 technology companies account for 40 or 50% of the 500 S&P 500 weightage. So
market value, market cap.
But the question is that if the shares of banks are going down, every day 1 lakh crore कम हो रहा है प्रभु, every day 17 दिन में 17 लाख करोड़ सिर्फ HDFC का कम हुआ है. So if you look at the entire banking universe, in 1 month they have lost 56 lakh crores. Now 56
why
lakh.
are FII selling? You must tell why are FII selling this very premier banks?
So this is a question that I keep asking people. So in the last 15 days, FIIs have sold roughly 70,000 crores worth of shares. Now they are selling because Indian stocks are still highly valued, because Indians are investing in it. Every month 30,000 crores is coming into the market. So when what is valuable can be sold. So that is the first principle. The second principle is that there are buyers for it. Somebody is buying, so they are selling. If nobody was buying, they wouldn't be able to sell. The most important point is the value of the rupee. 1 year back, rupee was 86 rupees to the dollar. Now, suppose an FII had invested in a share at 86 rupees a dollar, and now 93 rupees a dollar today. So even if he had got any return, that would have been eroded completely by the currency devaluation. So they are responsible to their shareholders and unit holders. So as soon, and they all have electronic markings, Prabhu. It's at this level, it has to be sold. It's an algo that goes and hits. Stop loss algos are there.
You mean to say in case of this rupee falls, the dollar investment goes down?
Yes.
Because
suppose he had bought a share at 86 rupees.
They have to pay more money. That's what it is you are saying. So coming back to the basic question is that once the bank valuation, how it is done? Is it BC, as you are saying, SBI is bank, it is market valued by the market, but other banks are not valued by the markets.
So SBI, because it has invested in technology, it is the largest bank, it has got scale, it has a very good management team, it has a history behind. So it has credibility because it deals with governments. There are two other banks which are doing okay, Canara Bank and Bank of Baroda, which are okay. But the question here is, Prabhu, that who are you reaching? So State Bank of India has a full bouquet. It gives you automobile loans, housing loan, this loan. Now, the reason why some of these shares are going down and the bank Nifty is going down is also because there is a nervousness about the economy. If you remember, we had discussed this earlier, that the largest employer in India, other than the security agencies, is the IT sector. Now, the IT sector in the last 1 year, 2 years has been recruiting very poorly, lower hiring, faster firing. Now, a large number of those employees have taken EMI loans for housing, for car, for everything. And their jobs, because of the advent of artificial intelligence, software jobs are shaky. Now, people are conjuring a whole story around this. If this happens, then that might happen, and that might happen, and this might happen. And this is something that has happened in the US also. For instance,
Shankkar, other thing is banks in India are not doing the core value of their job, which was collecting money and lending money. Now they're into various businesses. That is also, they're losing the focus. They are in the competitive market of selling insurance for their bank. They're selling some housing loan. They're selling cars also. ये गाड़ी का लोन हम आपको दिलवा देंगे, इसका वो दिलवा देंगे. So they're aggressively asking for those non-banking preferences.
No, so it is the classic 80-20 thing now. It seems like they are trying to sell insurance, they are trying to sell they're trying to sell all that. But all those things account for a minuscule portion of their revenues. Their main revenue, Prabhu, is giving loans to people like you. कि चावला जी आपको गाड़ी लेनी है, we'll give you loan. आपको घर लेना, we'll give you loan. Yesterday, I got a call from some bank which said that they are willing to give loan for housing. So I said, I just received an ad for 11 crore ka flat. So loan दे दोगे? बोले हाँ दे देंगे. मैंने पैसे नहीं देंगे तो चलेगा. So then they said, so they are trying to give loans to anybody and everybody because corporate borrowing is not taking off, because corporate investment is not taking off. So they
Corporate
have
are
to
getting
find
no,
somebody
Shankar,
to lend.
I'll stop you here. Corporate loans are people are getting very expensive loan. Number two, they're getting cheaper loan through IPS. They're converting into body IPOs. No?
Correct. Correct. Very much so. Also,
Huh?
they're raising money in the
And that
private
money
credit
going down,
market.
investors are IPO has become the latest money. Where you sell the share 5%, you increase, but as much money as you invested 25 years ago, you clear it out. So this is IPO is also creating a burden on the banks, no?
So yesterday or day before, we had this statement from Mr. KV Kamath of ICICI, who used to be with ICICI, he's now with Reliance, Geo Finance. And he was asked whether the war will have an impact on the IPOs, and also he has to be confident, optimistic, because Geo's issue is coming. So he said that no, war should be ending soon. It can't be long lasting. This will be a short war. People are still hopeful that all this will go away. That see, there are three layers of disruptions going on: Trump ka tariff, war, energy prices, plus AI. Now, in all this, I think AI is the biggest risk. Yesterday, Amazon's Jeff Bezos announced $100 billion fund, Prabhu, just to buy factories and automate them. He's buying manufacturing, say a car company, producing company. He will buy it, remove all the people, put robots, and automate it. This is his idea. $100 billion ka fund bana raha hai.
But they
So
won't
there
need the
is a
bank.
risk.
Anything you start, whether AI, whether you need some money from outside. No? Because
Yeah,
IPO in India
yes.
is creating much more trouble for the banks because banks are not getting the deposits also as fast as they should get. Because the money and the entire system has been built in financial products where people are disincentivized to keep FDs in the bank.
No. The taxation is so bad because I am investing in a equity share or mutual fund or whatever. There is one tax system. If I keep it in bank, it becomes business income as taxation plus
Yes.
TDS. So this is unfair. See that in a country like India, you have to think this a little better when 70-80% of your population, total population investing in shares may not be more than 20 crores.
To me, to say the total eco-structure, eco-environment, ecosystem, the system is, they are not working in favor of the banks. They are working against the banking system because people should not go to the bank.
The instrument, the instruments of the
Which are
banks.
there, you can't go it. Because even if you borrow the bank loan for housing, there is a certain amount which is exempted for income tax, not the entire installment which you pay.
The other way to look at it is this way, Prabhu. Banks want to lend money. Corporates don't want to borrow because they don't know what they can make that China doesn't make. Then they want to produce something that won't be disrupted by AI. Then they want to produce something that Trump will not mess with. Then they have to find government clearances. By the time they do all of this, if they have an opportunity, there are private credit people willing to give them money. Why go to a bank? So when all this has happened, then the favorite thing that you said, IPO, that is the other route. Now banks are struggling to find business. So 25% of their lending almost is retail lending, that people like you and me who are being given loan, credit card loan, this loan, that loan. Now, India is a very frugal society at the end of the day. We are very price sensitive. We are cost sensitive. We are not going to borrow like the Americans or the others. So the banks are constrained. That is why there is a pressure. There is a sense within the investors that if the GDP is growing at 7%, why isn't bank profit growing a similar commensurate level? So they think that this is not worth owning. But are the banks safe as of now? That's a question.
Yeah, but they may be safe. We shouldn't create a panic because still there is a lot of liquidity. But it seems that the credibility of the banks are going down. And if we conclude, it's a wake-up call. Resignation of Atanu is a wake-up call to look deeper into how the banking system was functioning. And there are dangers because the banking is not becoming an interactive system where people can deposit their money.
No, absolutely. It employs so many people. It is a lifeline for government welfare. It is a lifeline for small businesses. So it is very necessary for the government to look at all the parts and see what can be done to make it healthier. It has a healthy balance sheet. There is deposit insurance. All that is there. But it has to thrive, no, not just survive.
Yeah, that means let us conclude. That means that at the moment, this wake-up call means that government should look into review the system, the way
Yes,
banks are regulated,
I
review
agree.
the system, the bank deposits are decentralized, encourage people to spend more money with the banks, deposit more money into the bank, make the banking instrument much more attractive than the stock market.
Yes, totally.
So let us conclude on this. I think today in this bottom line of the whole issue is banking structure, banking management, banking architecture needs a review to make the banking safer for future.
More ready for the future.
More ready for the future. Thank you, Shiva, for coming. We'll meet next week again, discuss some other topic. Hopefully, which will be better than this. Till then,
Yes.
bye.